Great, thanks, Bob. Really do appreciate that. So let's go ahead and hand it off to our last predictor, our last psychic of the presentation. That would be Ron. So Ron, I'll hand it off to you as well. Give you the mic and give you the projection, if that sounds good. So Ron, I see your screen. I don't hear you. I'm not sure if anybody else does.
Okay, sorry about that. I was saying, yeah, can you see my screen? But you couldn't hear me. So, good sound, good screen?
Yep.
All right, sounds good. Well, last year I made the prediction that oil will hit $100 a barrel, and obviously it did easily. This year, though, even though I was 100, one for one, I'm obviously going to show you a couple charts, and 104 is the next big level. So we're going to look at that. We'll look at the euro, and I think it will break below 128. But it's got some more room on the upside, so some good trading opportunities. And it was kind of interesting that we talk about a lot of the coaches are saying we're going to do some more swing trading. I think most of you all will probably start swing trading more. So that being said, let's go ahead and of course hopefully with us, because I think most of you all know we do what we say we do. We trade this every day, and so we know what works, and we're always out there looking and working hard for you. So here was last year's meeting, and obviously oil had flirted with and just broken that $100 level, but it obviously did pull back nicely. So then we kind of go into the year, and it kind of rolled on up and hit a high of about 16, 17. So if you take a look at this and you go from this low to this high, you've got some, obviously this was an unbelievable
Ron, I'm still seeing your PowerPoint. I'm not sure if you're showing something else.
Well, I mean, can you see, you should be able to see this chart. I just slipped to the next page.
I don't see it with somebody else.
That's odd.
If you guys are, then
let me go back to the original. I just changed the page on the PowerPoint, so I changed I'm back on the original page.
No, it's stuck on the same.
All right, let me try.
Do you have the projector paused? It may be paused.
I don't think so. Let's see. Click, start sharing. Okay, how about that?
It's turned off now, the projection.
All right, this is. It shouldn't be paused.
Well, it's off now, actually. Okay, now it's back on. Now we see your chart. Now we see your mouse moving.
I'll let you all know when I flip to the next chart, and we can make sure that it does indeed update. Sure. I should have it going. So last year's meeting, this was basically where we made the prediction, and it did rally up hugely to about the 16, 17 level. Just kind of looking at taking some fibs, you basically were looking for a retracement back to this 50% level, about that 103.65, and believe it or not, that's where we're at right now. So, once you get past a 60-some-odd% retracement, then you're actually looking for a short side, and so you can see, you have great opportunities on the short side, and pretty much been looking for longs as of late. But that's why I say that 104 level, I think it's really going to go a lot higher. I think it's going to break 110, probably back up to 115, and then on up to 120. Mostly due to the situation over in the Middle East, and and I think the economies are starting to slowly do better. So therefore, we're going to see a little bit more price action on demand. But right now, it's a tough one to trade off a daily chart. So it's not something that I do. I don't trade oil off the daily chart. I trade off the 500 tick. I call the trades in the live swing trade room that we run, and they are incredibly accurate. Really, really good trades. So let me change the chart and let me see if you guys can all see that.
Yeah, you're good.
Okay, great. So What I think is going to be the year of trends. We are going to see some nice trends. We're not going to have nearly as much up-down chop like we did in some of those charts you saw, but you need to look for retracements, okay? This indicator that we have, the directional, okay? We have it in almost every single package we have, the Keltner bells, the UST, I think even SST has it. But anyway, a very powerful indicator, and I'll show you how you can use it on these longer term charts. And of course fibs, really good for looking at some possible retracements levels that you can go. Look to longer term charts, daily and even the 4-hour. That's what I do in the room each night is typically I've got some great 4-hour pairs, and I'll show you those. So here is my little survey. Day trading is fun or day trading is stressful. So you can type that in. I'm sure everybody's got a stressful story. You sweat as soon as you get triggered into the trade. Maybe day trading isn't for you. Okay, so swing trading is relaxed, or I can't sleep at night with open positions. You have to, it's hard to be a swing trader if you can't sleep at night with open positions. So, go with proper risk management, and you should be able to sleep at night. So let's go ahead and take a look at some of the Forex charts. This is one I love in the room every night, the dollar Swissy. Okay, and this was back in November, and you can see these are some possible targets, and this thing just kind of rolled right on up. But what I wanted to show you was look at these pullbacks. This heavier line is our directional, and so if you happen to be out, let's say you pulled all your profit, look for these pullbacks to this directional, and again, look, rally right on up. Nice pullback, kind of a little bit of a rally. They're getting a little bit smaller, and a pullback, nice rally. So here, this was just earlier in the month. We had a pullback, but I said, look at this. We've had this kind of double, triple top, or actually it was a double at that point in time. So I'm not going to take this unless it breaks it, and so we didn't. But currently, we're in a short, a 4-hour short. This is the nice thing about swing trading is you only do 1 or 2 trades a month. And if you go longer, daily, weekly, monthly, you're just going to have a lot less trades. But those trades are big. So now, this is another one that I love, Aussie dollar. And obviously, one thing I think I mentioned at the end of this, watch out for correlation, just like gold, silver, oil. Don't go long on all 3 of those. All right, because they're highly correlated, and if they start going against you, you could end up with 1, 2, 3 losses. So, pick the one that looks the best, or the one that you've obviously tested, and go long on just one of those. You don't need to be all in on one particular direction to make a lot of money. So again, this here I'm going to show you. This is we talk about what you see is what you get, and so here I don't have any targets on here, but it looks very tradable. I'm sure you all would have said, oh, I would have gone long here, sold right at that top, and gone short, and I would have skipped all that, skipped it completely, but got a nice short and went long. Well, this is what our indicators do, and they didn't hit it perfect, but we don't have many losses. So again, targets 1 and 2, absolutely perfect. These targets are just like the SST targets. It's uncanny how they can hit the exact thing by a couple pips. Catch this nice short. Had this long. Unfortunately, there's a spike right here. I don't know if you can see it. That got us in. So we did stop out of this trade. Got this short in the room. I said, okay, double bottom. Look at that. So we exited for profit down here. And then we have been long since the end of December, actually really first part of January, because we didn't even really have to trade, but we had a number of days to get on board this trade. And it's been going back. Again, directional bounce, pull back right here, another one kind of right there, and it's been selling off right there. So this is, we don't just make this up looking at a chart. This is what we actually use every night. Finally, I mentioned the euro. This is a daily chart, and it goes back to November. I had more I could have shown you, but I really wanted to kind of zoom it in and blow it up for you. This was, the high that we had back in November, and obviously it was in a nice big sell-off. Hit this bottom here, 126. The reason I said if it breaks 120, I think it's if it on the daily chart. If it breaks 126, you can see it go all the way down to 124. But right now, just using those fibs, you can look for a good solid retracement up here to this 134 level, and then I think it's going to resume its southern trend due to just the whole euro and everything. It's rallying now, but who knows how long it will go. If for some reason it does break this 136 level, then hey, shorts are off. Start looking for some possible longs. I mean, who knows? I can't predict exactly what will happen, but so those are some good levels for you. Look for that 134, retrace, then maybe go short, and then if it does end up going below this 126 level, look for it to go back down to 124, and that's based off the daily chart, just some swings. Really, pull up a daily chart and you'll spot those without anything. So like I was saying, swing trading is for wealth generation. Day trading is, fun for, it's almost like scalping, but you can obviously make very good money day trading. But really, to get those really big trades coming in, when you start getting $10,000, $20,000 winners, that is because of swing trading. Day trades, yeah, you might make 1,000, 1,500, 500, but the big money is made for the wealth generation, and you generally need a larger size account to do that. Use sound money management. That is critical. Okay, you can blow out your account swing trading with bad money management, because again, you're going for bigger trades, so you might have the propensity to, okay, it's going against me a little bit. Let me dollar, cost average. Let me buy some more. Okay, it's almost at my stop. I think it's going to turn around. Let me buy some more and move my stop. Boom, your account's going to be gone. So just please, please, please don't do that. Stops are there for a reason. If it hits it, it hits it. Move on to the next trade. Diversify. Watch for correlation. Okay, don't put all your eggs in one basket. Follow your signals and trust your system. Very, very important. Follow those signals. Make sure those stops are there, and they're there for a reason. Don't watch the trades. Let them run. I make mistakes, even in the swing trading. I'll get up in the morning, I'll look at the chart, and I'll see that it got 5 pips to the full target. So I'll send out a tweet. I'll say, hey, got 5 pips to full target. You might want to sell some and then move your stop to break even. And so obviously we're locking in. We're making some good money, but then again, sometimes it's pulled back a little bit harder, taking me out at break even, and then it rolls on down to the second full target and the second target. So, just try not to watch them. Just let them do their thing. You've got targets there, but certainly if they get really close, take a little bit of action, sell some. You've got another position typically for the bigger moves. And look for some great moves this year. There were some great predictions. I thought about later doing something on the S&P. I do think the U.S. market is going to go up this year. It's going to go up probably 10-15%. And oil is going to go up. Commodities are going to go up. I think the euro will go down. And that is pretty much it. So you all, it's been great having you for 2011, and stick with us for 2012, and I think you will be very pleased with the outcome.